Is the housing data you're receiving being compromised by the unicorn years? Are you wondering what the heck are the unicorn years? Well, I'm going to break it down for you. Hi, I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing update for the month of June. If you watch my videos, I always start off with a little bit of mortgage rate talk. So keep in mind, we know that over the past 50 years, the 30-year mortgage rate has pretty much moved in unison with the 10-year treasury yield, and the average spread has been about 1.72. That's 172 basis points, or if you want to think about it as 1.72%, that's fine. What we're looking at now, though, is about 323 basis point spread. And really, that's only happened a few times. We look at George here, chief economist over at Keeping Current Matters, says the only time the spread approached or exceeded 300 basis points, again, 3%, were periods of high inflation, like we're in now, and economic volatility like those seen in the early 80s and the great financial crisis of 2008, 2009. Kind of looks like this. So this is where we're at right now, right? So if you can see, going back over the past 40 years, really does not happen. Okay. And of course, what we saw last year with the mortgage rate essentially doubling in a single year has never happened in the history of mortgage rates. So Odetta Cushy, though, thought that basically it's reasonable to assume that their mortgage rates might retreat here in the second half of the year if the Fed kind of eases up on their monetary policy. However, she thinks it's unlikely that the spread will ever return to 170 basis points just because some new risks that we have in the market are pretty much here to stay, okay? I wanted to also talk about June being that National Home Ownership Month, and I thought this was really interesting, right? We talk a lot about, the American dream, and pretty much the vast majority of people, when you ask them, what's the American dream to you? It really comes down to home ownership, more so than being able to retire, successful career, college degree, okay? I thought this was also interesting. The Mind Consumer Insight report basically said 78% of Americans associate home ownership with the American dream. We know that. 65% of homeowners that think that that builds intergenerational wealth, which is absolutely true. But I thought these bottom ones are really significant. Basically, 68% of millennials and Gen Z now say that investing in real estate is a smart financial decision, and 43% of them are considering buying an investment property. That's a big shift with what we thought out of this segment of the population. We thought they were going to rent for much longer. They didn't want to own anything. They didn't want to drive, all this other stuff. We're starting to see, as they get older, as they start their own families, they're falling into the same kind of trend that every other generation before them has, and home ownership is at the cornerstone of that. Okay, this is the Gallup poll, and realize for the past 11 consecutive years, 34% of the vast majority of people thought that investing in real estate was the best long-term investment option. Okay, but we keep seeing things like this. Right, when we talk about consumer confidence and home prices, this is the Fannie Mae last year, 37% of people thought that prices are going to come down over the next 12 months, right? And that was partially due to the dip we saw in Q3 last year. But it persisted into this year. This is March 2023 and April 2023, where again, almost a third of people think that home prices are going to go down over the next 12 months, right? Well, why do they think that? Well, we're going to talk about it, right? So if we take an accurate look at the home price movement, I just combined the Case-Shiller, FHFA, and CoreLogic numbers into one graphic here. And keep in mind, these numbers are all slightly different because they're looking at a few different variables between them. But what I want you to look at is the overall trend, right? Obviously, we saw a dip in the market there over the second half of last year as mortgage rates have doubled, right, for the first time ever. But what we're seeing here is we're coming into this year that prices are starting to stabilize. All three of them show that. Even when we look at, Zillow shows home price stabilizing here in this year. Same thing with Fannie Mae. Realize this is a quarterly report and Q2 is not out yet. But basically, this is what we're seeing is home prices are starting to stabilize. And that's basically directly related to the incredibly low inventory that we have across the country, okay? Now, when I talk about unicorn years in the beginning, what I'm really talking about, right, and I wanna be careful when I do this, I really wanna make sure that I am not making light of COVID or the pandemic. I know for most of the people, COVID's kind of in the rearview mirror, but I also know that a lot of people died, and I myself lost family members during COVID, so I'm not making light of it. However, what COVID did was it really shifted people's mindset on what their home needed to be. Because during those years, it became, the house, the office, the gym, the school, it became everything, right? So people started to jockey around looking for the best place to live that, would provide a multitude of things in a single house. And what that actually did is it resulted in probably two of the greatest years in the history of the United States real estate market, right? Now that we're coming out of that, though, we keep seeing a lot of media. And remember, I always say that headlines do more to terrify than they do to clarify. We're seeing a lot of media comparing our numbers now to these kind of unicorn years, to the greatest years that we ever had, that were basically kind of, in some way, I don't want to say artificially created, for lack of a better term, but had this extenuating circumstance that spurred them on. Okay, so when we look at home appreciation, right, people will tell you now that, oh God, home appreciation is down. Well, it is, compared to the unicorn years. However, when you look at it versus 2017, 2018, 2019, we're pretty much right in line with where we were before the unicorn years, right? Same thing with pending listings. People will tell you right now, well, pending listings are down. Well, they are down compared to the unicorn years. But when we look at it compared to 2017, 2018, 19, even 2020, we're pretty much right in line with where we were before the unicorn years, right? Same thing, showing traffic. People will say, well, showing traffic's down. Showing traffic is down compared to the unicorn years, right? However, when we look at, again, pre-pandemic, we're actually having more buyer traffic right now than we did in the years leading up to the unicorn years, okay? Same thing, median days on market, right? Yeah, median days on market. Things are going up. Days on market's going up. It's taking longer to sell compared to the unicorn years. However, when we look at pre-pandemic, we're actually selling things faster, okay? Same thing, homes for sale, right? This is basically inventory. People are talking about inventory is growing and all these different places. Inventory is up compared to the unicorn years. But again, when we look before pre-pandemic, we're still vastly below where we were, okay, in 2017, 18, 19, and on the start of the pandemic. Same thing, months of inventory, right? Remember, I always talk about months of inventory. 6 months of inventory is a healthy, balanced market. Anything above that is a buyer's market. Anything below 4 months, a seller's market, right? We're still 2.9 months worth of inventory, which is still very much a seller's market. However, you'll probably hear in the media that months of inventory is up. It is compared to the unicorn years. When we look at it compared to pre-pandemic, I think you guys are starting to get the trend here, right? Same thing, foreclosures, right? Foreclosures are up. Yeah, compared to the unicorn years, right? But again, when we look at the foreclosure numbers going before the pandemic, we're really in good shape. Okay, so I just want to kind of give you that, as far as a frame of reference, right? What you're going to see out there in the media is all this doom and gloom, and they're comparing everything kind of year over year. And that's really not a fair comparison, right? And I think what's happening is people taking that information and it's providing this negative aspect when it comes to consumer confidence, okay? So keep in mind, you always have to kind of look at the bigger picture to understand what's going on. If you have questions about, what's going on in your neighborhood, what's my home worth, what do these numbers actually mean, just reach out. I'm more than happy to answer any questions that you have. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.